Hello, everybody. Welcome to another episode of the TF Podcast. My name is Jonathan G. Blanco. We talk about technology, finance, business, and that typically revolves around cryptocurrency and blockchain. My next guest is Les Sokolin. He is with ConsenSys. And with that, Lex, I'd love if you could introduce yourself to everybody.
Of course, thank you so much for having me. So I'm Lex. I wear two hats at ConsenSys. The first is to co-head ConsenSys Codify, which is the fintech software business within ConsenSys. So things focused on everything from enterprise financial services blockchain to digital assets to decentralized finance and the variety of fintech solutions around that. And then this, in my second hat, I'm the CMO of ConsenSys, so I try to tell the broader story of everything the company is doing and consider it from the ecosystem perspective. My background, I've been a fintech entrepreneur for about a decade, a little bit over a decade. Started my career at Lehman Brothers, so I had
Oh,
an
wow.
exit early on,
Yeah.
and then just got the confidence to start building companies and built a robo-advisor in 2009. Spent about 7 years turning that into a digital wealth platform, and then built out a equity research practice focused on fintech, and which is kind of how I became engaged with crypto assets and the concept around software running on Ethereum and new types of financial infrastructure uh, a lot more deeply, and that led me towards my current role.
Nice. I'd love to go back in time to Lehman Brothers and just being in the financial sector, like call it like
Yeah, we all
tradition.
would.
Yeah. Shift the narrative or go back to the future on that. But, so you're obviously very interested in fintech and the financial system overall. What have you learned, I guess, looking back 10 years, right? Like what were some of the mistakes that were made 10 years ago, as well as like what had you kind of learned along the way that have formulated your position to where you're at now?
Sure. Maybe I won't start with the core frameworks, but I think starting with uh, the broader lessons is that
Yeah.
human nature doesn't change, and it's as cliche as it comes, but essentially all of the things that happen you can boil back down to how people behave and what they want. And then in the good case, you might have systems that are anti-fragile and perform well when they're stressed, and are a kind of a drag on uh, bad human nature activity. Um, the flip side is these systems also become so they have their own weight, and they're sort of their own super organisms. They have their own logic, they have their own reason for being, they want to do their own things, and so often it's very difficult to transform them from the inside, and so efforts to completely break ground and create new things are sometimes more successful than trying to really find that uh, to thread the needle of getting exactly the right partnership. And so um, I guess if you boil it down, it's that a lot of the things that happen are quite predictable, and they arise of how people behave and what their incentives are. And then, if you let that go unchecked for too long, you can get some pretty complex, weird results.
Right. Yeah, there's definitely like a human psychology element there. And exactly what you're saying is uh, people's behavior usually is driven by, some level of incentives. And you see that, definitely in the financial sector,
Yeah, it's
as that
actually only
evolves.
human psychology. Like it's only human. There's like nothing else. The when we look at systems or power structures or large companies, think they're these external things, but they're just the aggregation of actions that we weren't there to witness, but it's just a bunch of people who built a thing for themselves, and that's taken on a life of its own.
Yeah. Yeah. I was a business major in college, and I always say, like, if I could have done college over again, I would have been a psychology major because, like, yeah, like you're saying, the human psychology element within business, within finance, within technology, it's definitely the driving force. And then essentially, teaching the machines to operate in a similar fashion. So super interesting. And so you said you built a couple products in the finance space essentially beforehand, and tell me a little bit more about what kind of they were focusing on, and what was the goal with those instruments.
Yeah. So it's a fairly straightforward story, and I think a number of people have had this journey. Although for me, certainly, it felt like my own scar tissue and was hard. So I joined Lehman in a strategy role for an investment management business. So the investment management business makes funds, sells funds, distributes them through financial advisors, and the the Lehman version of that was focused on wealthy people, and uh, a lot of business models kind of go premium. And so in 2009, I started a company called Nest Egg Wealth, which automated essentially the full workflow for a financial advisor, from interacting with a client to doing risk assessment to doing asset allocation, investing them in a portfolio, connecting to a custodian. And so around the same time as Betterment, a little bit earlier than Wealthfront and Personal Capital, started a B2C robo-advisor. And I think this narrative of democratizing access to financial services, I've heard it probably 20,000 times, and I've said it 25,000 times myself.
Sure.
Um, Around 2012, 2013, the whole theme flipped. So instead of me pitching, all of a sudden, financial companies were coming to us to purchase the software. They all wanted a private label version of the software.
Mm.
So that was a very powerful moment about this idea that digital transformation and helping incumbents cross the chasm. And that became the sort of core of the company, called Advisor Engine. We raised 50 million bucks from Wisdom Tree, which is an asset manager, and recently sold it to Franklin Templeton, which is another asset manager.
Yeah.
And so it was a really kind of deep experience, like operating experience in the intersection between digital investing and um, automation, or like the front end. And it was deeply educational, but also very frustrating, because nothing really changed no matter how good that company was. No matter how good Robinhood or Revolut or Acorns or Stash, like how big those companies get, end of the day, the 8 trillion of managed assets will still be at Bank of America or
Mhm.
Schwab. Like it just won't fundamentally alter the gravity of it. And so from that, I
And
joined as a partner. Go ahead.
sorry, do you think that's I don't want to say forever, but do you feel that, like, as a long-term thing, right? Like that it's going to take quite a bit of time to have that power shift.
No, I think the target is wrong. I don't think that um, changing putting the advisor into a phone, or putting a bank branch into a phone, or putting like a wire or an ACH or into a phone, it it just changes the distribution of whatever was there before. Like you haven't fundamentally altered a thing. I mean,
Hmm.
you've made it maybe easier to access, and you've created more supply, and therefore you created price collapse, and you've made it more accessible to smaller accounts, which is all fantastic stuff. Um, I mean, more broadly speaking, you've burnt a whole bunch of venture capital to do that, and uh, the outcome is a slight shift in the power structure, but like compared to Ant Financial or Tencent, everything in the West is like entirely irrelevant and pointless.
Yeah.
Like the power of those companies relative to anything any American fintech has done is order of magnitude.
And is that because, 10 cent and those are so intertwined into basically everything that people do in China, for example?
I think it's because it starts from the bottom and it goes to the top. So it connects into um, the actual banking rails. It doesn't connect to a thing that connects to a thing that connects to a thing that then
Hmm.
connects to the banking rails.
Yeah.
It's also the core experience that people have, so it's the operating system. Uh, Rather than iOS, people use the super app. That's where their payments identity is how they order Uber.
Yeah.
They don't order Uber through just the iOS experience. And so because it's the digital thing is embedded at the bottom, like yeah, of course you have digital distribution, but the product itself is different from, hey, would you like to be a customer of Morgan Stanley
Got
or
it.
of Wells Fargo or of, wholesale banking or pick whatever it is. Um, and so I then I kind of try to remedy that by learning, a little bit by doing, but primarily by learning. So um, joined a equity research firm called Autonomous to figure out if this sort of these symptoms were happening in other financial verticals like banking and lending and payments and insurance, and then what the frontiers actually were. Because I think putting stuff in a phone is just um, I think that theme has reached its limit. And so finding these frontiers was I think finding these frontiers is where you get the platform shifts. You constantly have to scale the difficult mountains. And so through that research is kind of how I got deeper into blockchain and artificial intelligence and AR/VR and where those intersect with finance. And in particular, the research I did was for large institutional money managers that were looking at financial companies and saying, like, what are the existential risks to these companies from these, from Facebook, from Tencent, from these sideways attacks. And so, kind of answered for myself the question, and I think the answer that I came away with was that blockchain-based manufacturing of financial products is that key that's been missing in fintech. So
Hmm.
instead of selling a bank account and saying it's digital, but it like APIs into Galileo, which then APIs into a publicly traded bank, and which still uses Fiserv for its core banking system. Instead of that, with blockchain-based bank accounts and blockchain-based investment accounts, your digital assets are the thing that you own, and there's no abstraction necessary to run a financial system. And so that's I guess that's the rationale I came to for why what we're doing is so interesting. Um, Company was bought by AllianceBernstein, the research business, a year and a half ago, and so I took that opportunity to try to jump back into operating and trying to make this future happen.
Yeah, awesome. So, one of the things that people say a lot when it comes to blockchain, so you're obviously a tech. Sorry, let me even take a step back on that. So you're obviously a technologist. You obviously understand, financial tech and so forth. And so, you hear a lot of people say things like, "Hey, blockchain is too slow, or it's not ready, or it doesn't." "Quote unquote" work for these systems in financial because of speed or because of adoption and so forth. How do you look at that when people say that, one, and like, does it matter if it is or isn't ready today versus like, the work that needs to get done to make it ready, or is it ready? I'd love your thoughts on that.
Sure. Um, uh, there's different ways to answer that. I don't think that, so I think it is fair to say that in many ways, blockchain-based systems are not ready um, to scale to the level of the global financial economy. Hopefully, that's not a controversial statement. However, or alternately, like, could you run, for example, like EVE Online or some other giant virtual rendering game on Ethereum today with uh, whatever it is? Could you run World of Warcraft on Ethereum? I don't think so. Um, but it's a straw man. It's a straw man in the sense that like there's plenty of multi-hundred billion dollar financial markets, annual revenue markets, where you have large chunky transactions that are infrequent. Um, Whether it is real estate or securitization of like infrastructure projects, or whether it is over-the-counter trading or private equity, um, or wholesale payments between, even within like some giant multinational company, or between a company and its contractors cross-border. There's lots and lots of financial activities that don't require you to have the throughput of a machine gun. Like, it's just pick a problem that suits the thing that you've got, right? Um, and so I think it's a straw man by folks that maybe have a highly focused problem set. If that problem set, for example, is Visa, or if that problem set is high frequency trading for equities, then yeah, you're not going to be as performant, but there's lots of other places. And then,
Mhm.
second order to that, if you look at um, either the Ethereum 2 upgrade that's coming up, or if you look at what are called layer 2 scaling solutions, so things that you kind of bolt on to um, the basic blockchain infrastructure, and then you use it to move things much faster, sort of one floor above. There are ways to put together architectures that can be very performant. Uh, but again, it's very kind of step by step. It just depends on what it is you're trying to build.
Yeah, yeah. Sometimes you have these people who are call it like quote unquote like blockchain altruist or truist in the sense that like it has to be exactly as Satoshi invented or so forth. I'm curious in your point of view from like a consensus model, like how much does something have to be, and again, I'm not even speaking on an Ethereum context. I mean, like as consensus, like when you're building companies or working with, some of your clients and so forth, how much does it have to be 100% blockchain solution as opposed to you're solving requirements, for the technology that's needed, right? Like
Yeah.
it's not like forcing blockchain per se, but saying like, hey, like we're going to implement some elements because it achieves these requirements.
So the difficulty with blockchains is that they are often like, they require a very different way of thinking about the problem.
Mhm.
And a lot of the time, very like traditional IT departments don't, it doesn't grok. It's like oil and water. So there's definitely a challenge there. That said, like my organizing principle is that I want to have all financial GDP, which is about 15 trillion of annual GDP globally. I want all of that to run through Ethereum or another open source programmable blockchain, which means all financial infrastructure runs through these decentralized computational networks. And so for that to happen, there's just a bunch of premises that have to be true, which is you have to integrate with existing software. You have to connect bridges where you can. You pick the battles you can win, and then you disregard the battles that you can't. And I think for most business process as well as market infrastructure, blockchains are just like the trust or the settlement layer. They're where you put the truth that has to be correct between all of the different pieces. But like, I don't also need to put my email on there or also put my CRM on there. I can just anchor the core data that the business is around. And I think in a blockchain stack, you're likely to see, um, or at least in the enterprise blockchain stack, I would say 5% is blockchain, 95% is other software. And then in the most purest, maximalist DeFi stack, you're probably still going to have maybe 80% of the code on Ethereum or IPFS, and then other things could be sitting elsewhere. The last piece I want to flag is this project called Baseline, which ConsenSys and EY and Microsoft um, have been working on, and it's about taking data elements from business process software and baselining them or attaching them to the public network. And so just dropping these bits all throughout Ethereum mainnet to essentially anchor gigantic ERP systems into just public Ethereum. And so we're working really hard to make sure that, at least in some way, no matter how risk-seeking your organization is, there's a use for this technology beyond the proof of concept.
Yeah, got it, got it. And so you said yourself that you're focusing a lot on some of these DeFi projects, right? Or you're building out. And so from you, what you're working on, are you building a lot of like the infrastructure on DeFi, or are you actually building out a DeFi product? Could you clarify that?
Sure. So um,
Or both, I guess,
our
probably.
our initial thesis and entry into the space is very much about data and risk management. So we think there is just a ton of innovation in DeFi, and um, I think it's one of the most amazing things to happen to financial services, honestly. Like
Hmm.
it's truly transformative technology, and I think it'll take a couple of years for people to catch up and understand really the implications that you can just have this vending machine that makes loans or that makes bank accounts or that makes trades, and this vending machine is sitting in a decentralized internet network, and it works for anyone no matter what. I think that's pretty incredible and often at zero cost. So I think it'll take time for people to understand it. And where we've been trying to act is showing data around those to make it clear, how to, which ones have what scale and how things are collateralized and how it works, and then develop risk management scores. So we have a project called the DeFi score, which looks at various kind of cyber risks that are bespoke to DeFi protocols, so that people don't just chase return, but think about, is this a relatively safe, again, relatively being the key word, is this a relatively safe place to put my assets? We also, I mean, ConsenSys is home for MetaMask, which is essentially the gateway for most DeFi projects. And then we've also uh, recently acquired or brought back in AirSwap, which is a decentralized trading protocol.
Hmm.
And so we're thinking very deeply about what we can do to the space to add value and not compete with anybody, but grow the pie, because I just think it's a truly transformational and beautiful space.
Yeah. Yeah, DeFi is definitely very interesting. It seems like also a entry point for acquisition from traditional banking sector, right? Like you having that experience in traditional banking sector. If you looked into the future, do you see some DeFi either getting built internally in traditional banking sector, or them acquiring DeFi companies or technology?
That's a great space. It's a great question. I would bet that none of the DeFi protocols want to be bought, um, that they don't want to be acquired. I think it's actually really hard for a bank to get around what a DeFi protocol does, because a bank needs to have gates, and it needs to define from a regulatory perspective what kind of activity you're doing. Whereas with DeFi, like in 5 minutes, I could uh, collateralize some position, get a loan against it, lever that loan up, throw it into 5 different portfolios, and then, like earn some sort of governance token as a reward for doing that. And it's just sort of like from a bank, from if you're a CIO, like a chief investment officer, chief security officer, a chief compliance officer at a bank, like all the stuff is just nonsense. Like it doesn't make any sense.
Hmm.
So I would be surprised to see banks acquire DeFi protocols. What I would be more what I think is more likely is that banks or investment firms will put money to work in the DeFi protocols, or they'll find a way to put money to work, whether it is part of the alternatives asset allocation, or whether um, it's an internal digital asset team that does it. I do expect capital from traditional companies to move into the space, but that'll be very different from owning the technology.
Hmm. Hmm. On those governance tokens, for example, the compound just came out, or not, didn't come out, but sorry, like it had like this massive surge and so forth. And um, I'm curious what your thoughts are. Like, do tokens cause problems in the sense of um, like, are they even necessary? Is a governance token even necessary as an incentive mechanism, in your opinion? Or like, is there enough value in the network outside of the token? Like in that compound case or any case for that matter. I'd love your thoughts on
Yeah.
that.
So the early crypto user um, is a speculative user,
Hmm.
uh, where it's crypto's the lottery, and you buy it and you 100x and you retire. That's sort of the early story, and I think it's really woven deeply into the DNA of the space to be excited about exposure through these assets. Um, I think tokens are a really interesting invention that can align a community to the project. And the biggest example of that failure is Facebook, where the community was so far uh, was so deeply hurt, I think, by the business model that Facebook had to adopt. And I think the cost is political and social and sort of the the melting down of American democracy, right? Um, so I really like tokens for that aspect. I also, if you look at PayPal, for example, when PayPal was getting started, they were paying $20 to every person to sign up, and it was a multi-level marketing scheme. If you refer, a friend, you get paid $20, and they get paid $20, and so on. And then sort of like rewards went down. So it's the same curve that everybody has been talking about in
Sure.
crypto forever. Um, so I think that bootstrapping of a network, that acceleration of the network is it's fine. The parts that I think are damaging are number one, when people are in it only for the capital appreciation, and so um, one of the projects we have is called Activate, which is, how do you launch a token network, not for capital appreciation, but by actually deploying and using the token, therefore activating the token, and how do you
Mm,
prove that you did some sort of work with it? Um, and then number two, I think the damage could be that a speculative use case can overheat and blow up a protocol. I mean, we saw this with ICOs, which at the time I thought there were lots of good ideas, but clearly not a fortunate set of execution at the end of the day.
yeah. Yeah.
Um, like this weird loop that Compound has created, where if you borrow uh, assets, you pay an interest rate, but the Compound token that you get as a reward for borrowing is actually more valuable than the interest rate you have to pay. So it's definitely an arbitrage opportunity that bootstraps everything, but it's also a little bit recursive. And so the question you should ask after looking at all of the DeFi protocols is like, what is the fundamental exposure to? What moves the price? If you put away sort of like arbitrage and speculation and leverage and the derivatives and the portfolio, whatever, like what actually moves the price? And it all comes down to either the US dollar or Bitcoin or ETH as the underlying, and everything else, because DAI is basically ETH, transformed. Um, and so what worries me is there's not clear economic activity other than the financialization that's
Mhm.
being built on top, and then the financialization is quite self-referential. So, um, you know, it's, I mean, we'll see how it goes.
Yeah. Yeah, no, I think it's interesting because while I think the tech is interesting for on that compound example, I think it could make sense. It's it seems essentially like kind of like API access to creating a DeFi network, and a super basic form. Like, while I think that's interesting, is like, yeah, seeing this token price go up really high and all the speculators come in, is like that, kind of like what you were talking about a second ago. I could see that just destroying the protocol, or just destroying the ability for that to actually frame a success. Super interesting. So, to shift on your other role, you said you're CMO as well of ConsenSys, and I'd love to just really talk about just marketing in general in the space, and how more in relation to how you operate and work with enterprise layer clients and so forth? Because I know you all do a lot of work in that regard. And I'm curious, like from a ConsenSys standpoint or your standpoint, it's like where is the adoption need to take place? Does the adoption need to take place at, I guess, at the top, at the enterprise level, or does it need to take place at the startup level, consumer side, or is it just kind of a little bit on both and meeting in the middle? How are you looking at it when you think about how you're presenting those things?
So there are little pockets of demand that in the crypto space that last for 1 to 3 years, I feel like, and they happen in these different industries, and they seem to be disconnected. Um, and so I think you need to have a process by which you are able to pivot the company to draw oxygen from those pockets, and kind of survive along the adoption curve of blockchains more broadly. And we don't know the timing on that, right? Because, for example, AI took 50 years to go through two AI nuclear winters, until it was something you could put into a phone and do a scan of your face to authenticate in your bank account. So hopefully we're not going to spend 50 years doing the same on the crypto side, but you need to be, I think, quite tactical about where you find demand. The exception is if you are primarily focused on the trading or mining use cases, maybe media as well, but sort of like media is almost chatter around the trading. And so I think, if you look at Binance or Coinbase, those are businesses with really fantastic revenue and cash flow, and that's because the core engine of the crypto ecosystem is financing their activity. I think if you're trying to work with enterprise and you're trying to cause sort of a bottoms up change in traditional finance, it's going to be a harder slog. And so you have to think more tactically about where the demand is, um, and how you can address it. So, we do everything from institutional sales to direct product sales to um, sort of more ambient direct marketing. There are a whole bunch of products of ours you can get just by signing up and using for free, like Infura. Uh, and then, of course, on the direct side, um, uh, MetaMask is one of the most widely adopted wallets, and so we try to touch, I guess, both sides of the market, right? Because we can understand what's happening on the innovation side, bring it to enterprise, and then we understand the requirements that enterprises have to engage with a new ecosystem, and so we try to bring at least some of that rigor back to crypto. Sometimes that's appreciated, sometimes that's not appreciated, but there's an organizing principle.
Yeah. Curious how your conversations have gone over the last, call it 3 or 4 months since the pandemic has set in. Has has uh, has things essentially remained the same, or is there more interest, less interest? How has the pandemic, I guess, affected what you guys are doing, or has it at all?
It, I think the pandemic's affected everybody, for sure, and has led to a bunch of transformation on our side. I would say on the client side, innovation budgets are not as important. There's no question about that. I think on the venture side, also, investors are focused on making sure their winners survive rather than uh, going very speculative.
Yeah.
Um, so that that creates pressure on both incumbents and startups in terms of their spend. I'd say interest in projects that we do has been very steady, um, if not if not up, especially with the buzz around CBDCs and Libra and the changes on the Chinese blockchain side. And so, I'm pretty optimistic about continued progress across those three themes, right? Like DeFi, digital assets, and uh, and enterprise blockchains. I mean, we see movement on all of them. Um, I don't think that COVID is like a secular change that would slow down what's happening. If anything, it shows, like I think fintech benefited the most from COVID because people understand what it means to put money into Square and to give it to businesses, or to put money into Venmo and give it to people.
Yeah.
I think crypto is just like one innovation cycle ahead uh, of capturing the attention.
I like that one innovation ahead. I like that. Well, Lex, hey, I've really appreciated this time on our podcast. I like to ask everybody on my show one final question, and that is, what is a question that you have that you'd like to ask our audience, and kind of have them think about as they go throughout their day?
Ooh, that's a really hard one. Uh, let me think about that. Yeah, I think we still struggle with this concept of how do we get more people to make this their primary financial system? And so, how can I get you as an employee to use a blockchain-based financial infrastructure as the number one place you put your your the payment from your employer, right? Like you direct deposit not into Wells Fargo, but you direct deposit into an account um, on Ethereum. How do I get you to do that? And then if you're a business, how do I get the business to pay in a stable coin um, versus go through a traditional payroll provider? I think if we can do that, like everything else will follow. And so the question is, what's missing? Is it that we have to completely hide away any words that are foreign? Um, are there infrastructure problems getting there? Like, um, what is the barrier? I think that's the key.
Yeah, love it. I like how you said like kind of the naming convention there too, because I do think that is honestly a part of, not all of it, but that's part of the part of the factor. I know that question wasn't for me, but is sometimes we make things sound a little bit more um complex, and it's like, hey, like we need to, on the CM with your CMO hat, and all of us on the marketing side need to think of the ways to really present it in the easiest way possible for folks. Well, Lex, again, thanks so much. What are some good ways that people can either get in touch with you or see what you're up to in the future?
So of course, check out ConsenSys.net. It's got both the developer products as well as the fintech products that I talked about. Personally, I'm Lex Sokolin on Twitter, and then I also do a weekly newsletter called the FinTech Blueprint, which you can check out at fintechblueprint.com.
Excellent. Awesome. Thanks so much, Lex. Everybody, thank you for listening to another episode of the TF podcast. Please make sure that you are liked and subscribed wherever you're listening to this podcast, as well as do us a favor and fill in those stars if you like this. It goes a long way in making sure that we continue to grow our podcast and get more people listening in on these great conversations. You can follow me at JG Product on Twitter, as well as at TFLabs_. And of course, get more info on what we're up to at tflabs.io. Thank you so much, and we'll see y'all again soon.